In the midst of all of that, let's bring in Arvind Sangha, Managing Partner, Geosphere Capital Management, to talk to us about how he's viewing US tech. First, to start off with, Arvind, let me get a sense of how you're seeing US tech. Of course, US markets have come off from the highs this November. Um, uh, does AI seem like it's in a bubble for you, or do you believe that we're okay where AI is concerned?
I think the bubble debate is so widespread that I don't think we're in a bubble. Bubbles usually happen when people are oblivious, or everybody's enthusiastic, everybody's bought in, and there are very few doubters left. But is this going to be a straight line? No trend is ever a straight line. Will there be reality checks along the way? Absolutely. Will we get a little ahead of ourselves and pull back as we realize that maybe things are going to take a little longer? Yes. So we're one of those phases where things got too enthusiastic, everybody jumped on the bandwagon, we're pulling back. But I think this is a long-term theme that is not going away. And if you look at some of the, it wasn't just a Google rally. If you look at GE Vernova, you look at Siemens, some of the key equipment suppliers for some of the AI power build out, they were up 4.5%, 5.5%. So again, they're not back at their highs, but they are recovering a little bit. And I think the recognition is that there is going to be a data center build out, but will all the orders go to NVIDIA or will there be others? It doesn't really matter. AI adoption is going to happen, and whether NVIDIA gets 80, 90% market share or gets 60, 70% market share is irrelevant to the broader theme that we are talking about. And whether it is Google winning or it's Meta winning or it's Microsoft or Amazon are all part of the game. But in terms of the AI adoption curve and AI usage, I think it's going to be it's going to be interesting to see how quickly it comes along.
Morning. The big debate which is currently on is on the rate cut for December, with the odds now in favor of a rate cut in December. Do you think that markets are going to be running ahead of that?
Yeah, absolutely. Today's rally was definitely, at least partly, if not meaningfully driven by expectations shooting up. I think now probably 70, 75% that there is going to be a 25 basis point rate cut based on statements by one or two Fed governors that came out since the Friday market close. And so I think that this is very much a liquidity driven market to some extent, and that liquidity will drive how far valuations can run. So while I may not call it a bubble, I think the valuations are relying on continued Fed liquidity injection, and therefore valuations that adjusted if the fear was that there may not be a rate cut. So to the extent that the rate cut looks more and more likely, we could see some continuation and rally. But I think, in our opinion, even if we get a rate cut, it's going to be what we call a hawkish rate cut. So yes, you could get a little bit of a rally, but I think the market might have to get adjusted to the fact that it's not going to be, one rate cut after another. And so right now it's just one step at a time. The market is hoping for and expecting a rate cut in the next Fed meeting in a couple of weeks' time.
Arvind, what's the sense like with regard to the yen carry trade? Because this is now going to start to impact global markets more meaningfully, more significantly. There could be rate hikes in the pipeline there as well. How do you believe that is going to impact both the US market but also global markets? Do you believe that the ripple will be large enough?
I'm not so sure. But to be perfectly honest, I don't I don't have as good a view on the yen carry trade. But there are always different carry trades, and yen carry trade has been one of the favorites while it was clear under Kuroda and for a while that Japan was going to be super dovish on rates. That carry trade is behind us. The rally in the last 6 months in the Nasdaq and U.S. markets and global markets has not been reliant on the yen carry trade. So yes, that trade is coming to an end, but that doesn't mean that was the only basis for the bull market. That was the funding mechanism that is going away. But I'm not sure that is in and of itself going to be the the significant driver for what happens next.
Last off, Arvind, how do you view India in all of this? Do you believe there is enough for FIs to start to look at India more seriously now, or do you still believe that there are plenty of opportunities out there and India is just one of them?
Well, I mean, there's nothing uniquely, great about India on the AI front. Let's be clear on that, right? On that front, it's not a winner. But in terms of growth, it is one of the better growing economies in the world, but it hasn't been visible in earnings growth, which is, the year-over-year earnings growth is only in the single digits. So I think what we need to see is a reacceleration of earnings. And if we see that in terms of the Indian GDP growth translating into earnings growth, which stands out versus the rest of the world, which is what we're hopeful for, then I think India remains, one of the favorite destinations. The reality is that China has been the shiny new object in 2025 because China has this unique growth coming from AI that has taken attention away from markets like India. And, Brazil, Mexico, all of these have done very much better than India. I think for India to get back into one of the favorite spots, A, it's not cheap even after the rally of the other markets, but B, its earnings growth has not been, setting the world on fire. So I think our hope is that in calendar 26, we'll see more discernible, clear differentiation in Indian growth. It's not going to come from the IT sector, but from the more domestic facing sector, the VC growth, then that would be very significant for the Indian market.
How do you see, Arvind, you track crude closely. How do you see the entire Ukraine-Russia peace talk, which is underway, and US pushing for one? And if that happens, do you see more supplies coming into the global markets?
Well, Russian oil is not off the market. Russian oil is on the market already, whether it's going to India or it's going to China or it's going elsewhere. But one of the things that has happened recently is Ukraine attacks on Russian infrastructure have caused refining, margins to benefit as some of the refineries have been taken out and some of that has been disrupted. So it'll be very modestly negative for crude. It'll be more negative for refining margins to the extent that they've benefited from disruption of crude refining capacity in Russia. I remain somewhat skeptical that, despite Trump's arm twisting, that any peace that is acceptable to both sides is on the verge of happening. But I think we need to be conscious that something could happen. But I don't think it's going to make a huge difference to crude price. It'll make more of a difference downstream.
Okay, Arvind, thank you so much for joining us, giving us that perspective. We let you go on that note. So that's the morning set.